good to see you. Before we get to chips, you did say that today's trading would be instructive. What's it telling you so far?
Well, I mean, what we're seeing is, and Bob Pisani was talking about it in the before the show started, that we're in the market here where you just can't hold on to any rallies. Days where the NASDAQ trades higher intraday but finishes lower, we've seen, where it just pulls back at the highest rate over the last 5 months, going back to 2010. So it's not necessarily encouraging signs from a short-term perspective. But again, you don't tend to see, a straight up if you are going to rally. So, I mean, it's not surprising given the overall trends we've seen over the last several days. And I think we're just going to see this going forward.
We did point out some of the relative strength this morning in semiconductors, and we still got the SMH up better than 1%. What leads you to them right now?
Well, so it's pretty interesting here. So if you look at we were talking about Uber, talking about now focusing over profits, over growth. So you look at overall valuations in the market. The tech sector, a lot of the air out of its premium multiple has come in so far this year, but it's still trading at a higher than average premium to the S&P 500. It's trading at about a 28% premium versus an average over the last 10 years of closer to 20% premium. Within tech, though, you see the semiconductors, and they're actually trading at a discount to the S&P 500 right now. And historically, they normally traded about a 20% premium. So you see that little bit of a discount there. Plus, what's really been interesting is since the middle of April, the overall market has kept going lower here, and we making new lows. The relative strength of the semis, I've talked about this over on the show, several times over the last several years, is they tend to be a leading indicator of the broader market. And you saw it at the end of last year. The semis didn't confirm the new high in the S&P 500, the relative strength. And then what you've seen since mid-April is you've seen the relative strength of the semis actually picking up a little bit, even as the S&P has made new lows. So that's something that is, when you're looking for positive things, that's something that stands out to us. And that coupled with the valuation premium makes it, if you're going to focus on tech and go into tech, that's an area where, it may provide a little more safety.
Yeah, I do wonder, though, in this market, Paul, whether that's an indication of something that you should buy first or sell last. When I also look at what's happening now, I wonder, with these companies, is it important to consider who's got the cash to survive whatever economic difficulty macro-wise we're going through here, the product market fit to innovate? And then I also wonder, who's the anti-metaverse right now, right? Like, who's in that space where the narrative has turned too strongly against them? Just like a few months ago, the narrative was probably too strongly in favor of the metaverse and, Roblox and whatnot, and Meta, we're going to go to the moon?
Well, I mean, I think one stock, where the sentiment has gotten completely south here is in Amazon. I mean, how many times over the last 2 years have people said, look back to early 2020 and said, oh, if only I could go back in time and buy Amazon where it was, back then. Well, guess what? Now you can actually do that. Amazon is one of, 43 other stocks in the NASDAQ 100 that is back down to its pre-COVID levels here. But again, I think some of these stocks, are deserving it. A stock like Peloton probably deserves to be well below its pre-COVID levels. But a stock like Amazon, it's run into trouble. Last quarter's report wasn't great, but Amazon has shown I think it's one of the most, well-respected companies, not only in technology, but in the entire country. And, Jeff Bezos still owns 10% of the company. So, I mean, he may not be CEO anymore, but he's going to, if things don't start turning around, he's going to find himself back in there.